Ladies and gentlemen, good day and welcome to Prudent Corporate Advisory Services Q4 FY24 earnings conference call hosted by Equirus Securities. As a reminder, all participants' lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. This conference may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. And I've handed the conference over to Mr. Lalit Deo from Equirus Securities. Thank you and over to you, sir.
Yeah, thank you, Neha. So, good afternoon, everyone, and thanks for joining the call. To give a brief update on the 4Q FY24 as well as FY24 results and address investor questions, we have the management of Prudent Corporate Advisory Services Limited, represented by Mr. Sanjay Shah, Chairman and Managing Director, Mr. Shirish Patel, CEO and Whole-Time Director, Mr. Chirag Shah, Whole-Time Director, Mr. Chirag Kothari, CFO, and Mr. Parth Parekh from Investor Relations. Now we would request the management to start with the opening comments, post which we can open the floor for Q&A. Thank you and over to you, sir.
Thank you, Lalit, and good morning, everybody. Let me welcome all of you to the earnings call of Prudent for the Q4 FY24 as well as for the full year FY24. So I thank you all for sparing your valuable time to join us. I hope you all would have gotten access to the investor presentation which has been uploaded by us on the exchanges yesterday, because when I'll be discussing, I'll be giving a lot of references to the slides of that particular presentation. So before I move to Prudent's financial numbers, I would like to take you through the slide number 15, which contains broad macro data and talking about the future of mutual fund industry. So if you look at on the chart, left-hand side of the chart of the slide, we have shown that how the nominal GDP of India has grown in last decade and how it is expected to grow till FY30. So in last decade, nominal GDP has grown at a CAGR of 10.6%, and over next 7 years, we expect that GDP will grow at a CAGR of about 11%. So this 11% CAGR implies that we will double our GDP and will touch the 566 lakh crore of GDP by FY30. Now, if you see the chart on the right-hand side, it shows the data of gross household financial savings and the proportion of those savings as a percentage of GDP. In last decade, our gross household financial savings has almost tripled, and in next 7 years too, this number is expected to double at the similar pace like we have been projecting a growth in the GDP. So chart on the bottom left shows that proportion of bank deposit plus currency and mutual fund and equities in overall gross household savings, how it has been changing. So proportion of bank FD and currency in overall saving is trending downwards. If GDP moves as estimated, and then we believe that there is no reason to believe that equity as an asset class wide should not do much better, and this ratio should skew more and more towards the equity and mutual funds. So all these factors make us to believe that industry should ideally touch 100 lakh crore and double from the current level by FY30, and Prudent being a strong retail dominant player, we will definitely grow faster than the industry over next decade. Let me take you to slide 16. So this slide 16 talks about the fruit of shift to mutual fund industry, which has already been visible in the numbers. So wherein, if you look at mutual fund AUM to GDP has grown from 7% to 18% in last decade. Unique investors has also grown almost by 2.5 times in last 6 years to 4.46 crore, and SIP flow has also grown at a rapid 25% CAGR. But we believe picture अभी सिर्फ बाकी नहीं है, हम तो समझते हैं कि picture शुरू नहीं हुआ है, and that is what we believe that going to be the growth story. We feel that we are very, very lucky to be present in this growing industry, and we will reap the benefit in the years to come. Now let me take you to the slide number 20, wherein we have tried to highlight the Prudent growth story in last decade. So if you look at this slide talks about the growth of Prudent's number of partners and number of customers in last decade, which grew by almost 10 to 11 times, with the help of number of partners and the number of customers, our equity AUM grew by almost 39 times in last 10 years, and SIP book also grew by about 29 times in last 10 years. So I think these are the numbers which we are important. Just wanted to communicate that in last decade, Prudent has created a significant base, and in next decade, we'll have a significant benefit of the base which we have created. So I just wanted to communicate something on the overall industry growth potential and how Prudent has done in last decade. So now let me take you to the slide number 42, which is talking about the business numbers. Yeah. So if you look at the slide number 42, this chart on the left-hand side indicates the huge tailwind for the growth in mutual fund business for the Prudent in FY25. In FY24, we earned our revenue based on the daily average AUM of 69,000 crore. We are beginning the current fiscal with an AUM of 83,400 crore, which implies there is a 19.2% higher starting base compared to full year average of FY24. So even if our AUM stays stable at 83,400 crore for the entire FY25, our revenue growth in current fiscal will be around 17%. Considering there will be a no B30 revenue in FY25, please keep in mind in FY24 out of total revenue of 100 rupees, 2 rupee 40 paisa or 2.4% was the revenue came from B30. So if you take out that, we are expecting that 17% is going to be the overall top line growth based on the current AUM. So that's a very massive tailwind with which we are beginning the current fiscal. As far as current quarter is concerned, our quarterly AUM in March quarter has grown by 44% YOY and 12% sequentially. Now let us move to slide number 43. So slide number 43, we have shared the details of what has moved our AUM on a year-on-year as well as on a quarter-on-quarter basis. As seen in the left-hand chart, equity AUM has moved by almost 53% year-on-year to around 80,000 crore from 52,525 crore. So there is a 53% growth. However, in this particular growth, almost 3/4 or about 78% growth came because of mark-to-market movement. I'll just explain you the significance of this mark-to-market movement number. So in the current year, we got the mark-to-market movement of 21,541 crore. I'll tell you that on 30th May 2020, total AUM of Prudent was 21,000 crore. So in the last year alone, we got a mark-to-market gain of more than AUM which was there before 4 years. Now, this strong momentum in equity, it has also resulted into a significant growth in our net sales also, and that the same thing is reflected in our March quarter. During the full year, our net equity sales stood at 6,164 crore, which is higher by 25% compared to 4,915 crore of net sales in FY23. Now let me take you to the slide number 44. So it's a slide which talks about overall market share of Prudent in the equity AUM as well as SIP data. So our market share in the equity AUM ex ETF has improved from 2.46% in March 2023 to 2.52% in March 2024. On the bottom left, we have given you the data on monthly SIP flow and our market share in SIP. During the quarter, our monthly SIP book has crossed 7 billion mark, and our monthly SIP as of March end has touched 726 crore. We have added almost 200 crore to our SIP book during last 12 months. It's a growth of massive 40%. In the same period, industry SIP book has also moved from 14,000 crore to 19,000 crore, which is also a growth of about 34-35%. Given our strong focus on SIP, we foresee our monthly SIP flow crossing the mark of 1,000 crore by March 26, which we have been giving as a guidance since a couple of quarters. Please note that from last quarter, we also started providing you the STP numbers. In the month of March, we collected 95 crore through systematic transfer plans. This number is reported by us on the actual realization basis. The average value of each STP is 6,800 rupees, which is higher compared to the SIPs. Please note, STP value of 95 crore is not included in the SIP number of 726 crore. Now I am coming to the financials, and I will take you to a last slide of the presentation, which is slide number 47, which talks about the standalone financials of Prudent Corporate Advisory Services Limited. So now, so look at this slide number 47, and which talks about the standalone numbers. So I'll discuss the full year number as far as the standalone numbers are concerned. So most positive part for us in FY24 is standalone profitability of Prudent Corporate, which is profit after tax, has grown about 100 crore, which is a significant milestone for us. Revenue has also grown at a slower pace compared to yearly average AUM growth. While our full year average AUM grew by 32%, revenue from mutual fund grew by 27%. This is mainly, as we have been pointing out in earlier calls also, is mainly because of the withdrawal of B30 incentives, which was implemented from February 23 last year. So if we look at the impact of B30, if let us assume B30 impact would not have came, अगर B30 का मुझे revenue मिलता, तो पूरे साल के अंदर we would have earned 36 crore by way of an additional revenue, which is roughly about 6 to 7% of my top line. So अगर मैं वो 6% add करता हूँ 27% के अंदर, then probably this will be, I'll be able to explain you why my revenue has not grown in line with growth in the average AUM. Let me just tell you, during FY23, our yield on overall book was with B30 so in the overall yield in FY23 हमारा B30 का जो yield था वो करीबन 8 पैसा था. If we remove that 8 basis point, then in FY23 our normal revenue, which was regular revenue by way of trail, was about 88 basis point. In FY24 also, on the full year we earn about 91 basis point as a trail, which includes about 2.4 basis point, roughly 2.2 basis point, which is attributable to B30. अगर वो मैं निकाल देता हूँ, because in the FY25 हमारा B30 से revenue नहीं आएगा, it will be practically zero. So ex B30, we are also expecting that the revenue, regular revenue, will be similarly in the line about 89 basis point. So finally, despite a lot of challenges on the top line due to withdrawal of B30 incentives, as we've been explaining about the increasing share of indirect channel in total, leading to higher payouts, additional PLC costs, which was a change in the current year, we are still able to grow our operating profit by 28%, which is in line with our top line growth. Now, however, in spite of there being a lot of challenges, we are starting the FY25 with a strong tailwind of 19% in the AUM, as we discussed in the previous discussions. And we believe that operating leverage is going to play out in the current year, mainly because post current year performance. And another important thing we wanted to highlight, that in the current year, once we have completed the review of our team, our total employee cost is going to rise about 50.67%. We assume that PLC and administration costs will probably rise in tandem with growth, or probably about 8-10%. So assuming if our AUM stays at 80,000 or 83,000 crore, whatever is the opening AUM, I think we expect that the operating leverage will definitely play out in our favor in the current year. Overall, on the standalone profitability, we grew at 42% to 105 crore on a year-on-year basis. Now let me take you to the final slide, which is slide number 46, which talks about our consolidated figures. On the consolidated front also, it gives me immense satisfaction to see that our consolidated top line has crossed 800 crore, and we reported a growth of 32% on the top line. On the insurance front, our total premium, including renewal, grew by 23% in FY24 to 556 crore, and our top line in the insurance stood at 111 crore in the full year. So another important thing on the GI front, where predominantly we do a business on the in the retail health business, I think that business has been picking up very well for us, and the fresh business sourced by us in GI in FY24 grew by almost 37%, and our total book of GI has reached to 120 crore. Please keep in mind, GI is a predominantly a renewal premium kind of a business, renewal business for us. So you can compare that roughly to a business like your mutual fund, where there is a significant revenue comes by way of trail. In case of life, one of the main products which we sell on life front is the saving products. Given the bumper sale which we had in fourth quarter of last year due to taxation changes, we witnessed the consolidation in the LI vertical. We have been maintaining this trend since the beginning of this fiscal that last quarter will face headwinds on account of a very high base. Fresh premium in FY24 in LI is lower by 41%. However, number of fresh policies sourced in LI is down by just 5%. So the large drag came from the average premium per policy, which is lower by 37%. Hence, given a realistic base which has been set now by us in FY24, we are confident of a reasonable growth in LI vertical also in the current year. So overall, on a consolidated front, operating expenditure grew at a higher than the revenue, mainly on back of higher other expenses, as explained in earlier calls. In the current fiscal or from current fiscal, we had taken a call to spend on marketing, branding and awareness for the insurance vertical. However, we believe that in the current fiscal, these spends will grow proportionate to the insurance revenue and consolidated operating margin should be better compared to FY24. Overall consolidated profit have grown at 19% YOY to 138.7 crore. Cash flow from operations stood at 150 crore. Cash flow from operation to PAT stood at 108% and return on equity stood at 28.8% for FY24. So this is the summary of FY24. All in all, when we are entering FY25, we find FY25 looks very, very promising to us. On a standalone basis, we have faced headwinds in form of B30, additional incentive which has been withdrawn, payout pressure on account of mix changes, and elevated PLC costs. Now we believe that these all things will normalize when we are entering into FY25. On the insurance business also, as I told you, that we have set a good base in FY24 and we are starting with that good base. So we are assuming that FY25 is going to be much, much better as far as your insurance vertical is also concerned. So we are very, very confident when we are moving into FY25 because a lot of headwind is now becoming a part of our base. Lastly, we are getting closer to hitting 1 lakh crore AUM, which we have been targeting to achieve by March 26. As when I am talking to you in the current month, we have almost touched 87,000 crores AUM. Our treasury book has reached 350 crores, which is giving us a war chest to grow inorganically. So we believe Amrit Kal for the mutual fund industry has already begun, and we are aptly placed in this growing industry and will reap the benefit in the years to come. So with this, I will just say thank you everybody for listening to me patiently and will open the floor for question answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ajax from Sundaram Mutual Fund. Please go ahead.
Hi sir, thanks for the opportunity and congrats on a very good set of numbers. So my first question is on the payout in the mutual fund. You mentioned that the indirect share has gone up. So how much has it gone up in a QOQ basis? And that should have driven the commission increase as well, right? The share to distributors.
Yeah, so I think you are absolutely right. If you look at on a Q1Q basis versus let's say October, November, December to January, February, March, I think share of indirect has gone up by about some 70 basis points. So the AUM in favor of indirect has increased by 70 basis points. If you look at the 60% or 65% payout of that, so 7 6 are 42. I think in the current quarter there is a GP compression of about some 50 basis points, and the 40-45 basis point is explained because of this. So you are right.
Understood, sir. So can you give me the number, like what proportion of that, like increase? I understand absolute percentage, indirect proportion.
Yeah, indirect percentage. So 80%
in indirect and 10% in B2C.
Sorry, I didn't get that. Sorry, can you repeat?
90 and 10 in the source.
Okay. Okay, understood, sir. Understood. And sir, secondly, you mentioned about the increase in employee costs. Sorry, I didn't get that. What's the increase expected this year?
I was just trying to explain why operating leverage should play out in the current year. So we already completed the review of entire team for FY2023-24, and I'm talking about the April 24 salary bill. We'll have a revision of 15.6% to a March salary bill.
Okay.
That is, I was explaining. So I was saying that my top line is likely to grow beyond 17-18%, while the major expenditure for us is salary, which is about 15.6% growth. बाकी जगह पर मेरा बहुत ज़्यादा growth नहीं आएगा. So the operating leverage should be much better for us in the current year.
Understood, sir. That is very helpful. And my next question is on insurance. So insurance, the commission we receive for non-life, has it come off on a sequential basis? Because I was seeing some 30% odd. Now it's dropped to 22%, the commission to premium.
So I think probably, Suresh?
Yeah, so basically I think as we spoke earlier during the call that after this EOM guidelines, the commercials are linked to many of the parameters. So certain parameters are easily, you can say that X commercial I'm doing some kind of business and X percentage based on certain persistency parameter. Certain commercials we actually come to know post the quarter ending. Whatever is guaranteed receivable or receipt for that particular quarter is already accrued in the last financial year. Whatever is available based on persistency data and every other data, that will come to know in the next probably in a week or so. If we simply assume that number, the percentage receivable has not come down. So mainly you can say that unidentified amount which is not yet finalized with the insurance company, the difference is mainly because of that. Because first 3 quarters data has already come in the month in the last financial year. Last quarter data is yet to be finalized. So if we add that number, I think mota moti this number would be the similar like what we saw. In actual terms, there is no difference in the receivable in the first year.
Perfect, sir. Just a final question, if I'm excused in. Other expenses usually gets tied to some portion of insurance also, right? Because earlier it was separately given as marketing spends. Now it gets at the top and instead of at the other expense level. So what is that expense? Do you give that separately?
So I think we never provided the separate number for marketing expenditure, but you are right. If you will see the elevated number on other expenditure has 2 components. One is, as we explained in previous calls also, that from the current year we started spending a lot of money on creating branding, awareness and marketing for the insurance vertical, as well as there was a change in our Prudent PLC program, where we started providing some kind of points to the existing AUM also to the partners. So these 2 components has gone for a change. That is probably the giving you a higher expenditure on the other expenditure front. But the important thing is that these are the change which has been implemented in the last year, and now it is a part of P&L, so you will not see a significant change going forward.
Perfect, sir. This is very helpful, and again, congrats on a good set of numbers. Thanks.
Thank you. Ladies and gentlemen, you may press star and 1 to ask questions. The next question is from the line of Swarnabh Mukherjee from B&K Securities. Please go ahead.
Yeah, thank you, sir. Good afternoon and congrats on a very good set of numbers. So 2-3 questions. First one, I wanted to understand in the mutual fund business, the PLC that you were running, how is the weightage between, say, the fresh flows that will be coming in vis-a-vis the existing AUM? So just what I'm trying to understand is that if somebody is able to maintain the existing AUM but not to be able to increase the flows very significantly vis-a-vis someone else who is doing very well on the flow basis, will the person who is doing very well on the flow basis get better RNR kind of a thing?
Suresh?
I have not understood your questions properly, but what I understand is that commercials are communicated while doing the transaction. If someone has done the transactions 2 years back and whatever commercial was communicated that time, he is getting the same rate. or someone I think who is doing the business today, whatever is the business commercially we communicate on a new business today, it is applicable to everybody the same. Yes, there is one difference that is based on the total AUM with us. So there are different slabs available based on the total assets with us. But there is no difference in the commercial payout to a guy who is doing a fresh business or who is not doing a fresh business. It is, as I said, the commercials are communicated while doing the transaction. The only difference is based on their current assets. Depending on the slab in which they are falling in, the rates are similar for everybody. I think this is what you asked.
Yeah, so I just also wanted to understand more, not from the the commissions that you pass on, but from the PLC side. So is there any commercial benefit from the PLC point of view to a distributor if he does better flow? My whole focus is to understand that if there is a strong flow generation in the coming year, how should we think about the PLC cost? So that is what I wanted to ask.
Perfect. Let me address this, Siris. So I think let us first of all tell you PLC doesn't provide any commercial benefit. It is mainly the participation in the learning conclave, where probably we will recognize the person based on various parameters, and one of the parameters is AUM, which was not there in previous year. In the last year we started giving some points on the AUM. However, there are various parameters. So if you talk about the gross sales, net sales, SIP, net SIP. So there are various parameters, and based on the various parameters, somebody would be eligible to participate or qualify probably for the PLC. So overall, if you are saying that is there a commercial benefit, I think the commercial benefit will not be there. He'll be just able to participate in the learning conclave to understand about, and then it's a motivation for him to meet the people, exchange, and probably that's mainly from the point of motivation and driving the businesses.
Okay, sir. So if I understand correctly, then maybe whatever you are budgeting for PLC at the start of the year, there might not be a very significant expansion, even if say the business does really well throughout the year. Would that be a correct understanding?
Sorry. So normally budgeting we will do based on the previous year. So let's say, for example, in the current year, my total expenditure is hypothetically 10 crore. Now I'll assume that 10 crore के ऊपर 10%, 12% based on the. So there are two things compared to 22, 23, 24 के 23-24 के अंदर मेरा खर्चा बढ़ा because there was a change in formula. That change in formula is not there now. And because of that, now let us assume कि last year के मेरा खर्चा 10 crore का था. I think we can just assume normal growth which will happen in line with the business. And that is what we will provide also every quarter, and that is what is happening in the current year also. हमने PLC का मेरा expenditure हुआ end of the year, but full year provisioning has been reasonably okay. बहुत ज़्यादा फर्क नहीं पड़ा हुआ मेरा. I think we could be able to forecast properly, and if you look at the cost provisioning also, it's not very erratic. I think it has been very, very smooth every quarter on quarter.
Right. Okay. Understood. So so at a base case, maybe a 10-12% growth is what we can work with at this point of time on the PLC.
I'm hypothetically telling you, if let us say everything remains constant, then the cost might remain the same.
Understood. Very helpful. So secondly, in terms of the gross profit margin for this quarter, if you could give us a number with which we can work with for the coming year, given that right now there would be slight differences that has come because of maybe till Jan you were paying out the B30 commissions, etc. So what number can we work with going ahead for FY25?
So the top line you can assume about 88 to 89 basis point as the earning. That is what I have told you, because in the full year we earn 91 basis point on average AUM of 70,000 crore. I think we are starting the year with 83,000 crore. So on 83,000 crore you can forecast about 89 basis point as a regular trail, right? Because B30 is out, so you need not to assume the income also, you need not to assume the expenditure also. That is number one, which is we are expecting about 17% to. So plain you can say that if my AUM remain at the opening level, if there is no change in 365 days, then at least 17% top line growth is something which is visible. Now you come to so let us assume 17% is top line growth, 17% is the expenditure growth also. Let us assume on the I'm saying the commission side. Commission might be little bit higher because in the full year your average has gone skewed towards the indirect. So my assume मेरा assumption कि पूरे साल के अंदर आपका commission का खर्चा 100 रुपये होगा, हो सकता है वो साल 101 रुपये होगा, because virtually from first quarter to last quarter your ratio has little bit skewed towards the indirect. So at least you can expect 0.5% more on the commission expenditure. right? Then rest all the thing is probably we are expecting other than salary. I already gave you indication that salary cost will rise by about 15.6% on the March bill. Rest all should be inflation driven.
Okay, understood. And also in terms of your internal targets related to say the SIP book, etc. So you had earlier told that you aspire to reach around 700 crores by fourth quarter. You have exceeded that. So how should we think about that playing out in FY25? What would be your internal targets?
So I think we have been very vocal saying that we want to reach 1,000 crore by March 26. So otherwise, normally we do not give any forward guidance. There are two numbers which we have been telling consistently. We want to reach by March 26 1 lakh crore of totally 1 lakh crore of AUM and 1,000 crore of SIP. Otherwise, we do not provide the forward guidance.
Okay. Okay, got it, sir. And lastly, one question on the insurance premium per policy number which you have given in your presentation. So, I mean, since in the life insurance side, you generally focus on traditional products. So I just wanted to understand, I mean, what is the average premium per policy there, and what would be the average premium per policy on the GI book, if you can give some color?
Series, Chirag, anybody want to address this?
Currently, we don't have the number in hand, so I think we can ask Part to forward that number to them.
Sure. Helpful. Yeah. Okay. So thank you so much. Thanks, and all the best for the coming year.
Okay. Yeah. Thank you, sir.
Thank you. The next question is from the line of Nilesh Jethani from BOI Mutual Funds. Please go ahead.
Hi, and thanks for the opportunity. Sorry, I joined in call a little late.
Sorry to interrupt you, sir. May I request you to use the handset, please?
Yeah. Am I audible now?
Yes, sir.
Okay. Thank you so much for the opportunity and congrats on a great set of numbers. My first question was on the insurance take rates. Just wanted to understand if the mix in this quarter for the renewable has slightly increased vis-a-vis the new premium. Is that impacting the take rates? And we assume the increased take rates announced at the start of the year would continue going forward also?
So, per se, our commercial arrangement with the insurance company has not changed. Whatever was there in 23-24 has continued in 24-25. Commercial arrangement remains the same. But what you are saying is absolutely right. The composition, specifically if you talk about the health insurance segment or even the life insurance segment, as and when my renewal book becomes bigger and bigger in percentage term of the total collection of the premium, the gross yield on the total book might come down because renewals are paid lesser compared to the fresh premium. So what you are saying is absolutely right. But otherwise, in terms of commercial arrangement with the insurance companies for the fresh rates and the renewal rate, there is no change between 24-25 and 23-24.
Got it, sir. So second question was on the operating expense. So I was just doing some calculation with regards to the console minus standalone for both employee as well as other expense. So I see on the subsidiary, which is a net outcome, that is console minus the parent, there has been a 46 crores odd increase in the expenses. So wanted to understand from 5.4 crore in FY23, the difference number is looking like a 52 crores in FY24. So can you help me understand the reason for a sharp jump in this number and how to look at these expenses going forward?
So I think probably we have been explaining this consistently that in case of insurance vertical, we have started spending a lot of money on marketing and branding for the purpose of generating a lot of awareness and doing the business on the insurance front, and that is what is probably bringing us the increase in the cost. So that is if you look at the X mutual fund distribution or X standalone, I think the major contribution or the major expenditure is coming mainly because of your email money, overall marketing cost on and branding cost. That is number one. Number two is there is some amount of cost on the PLC also, right? Because there are a lot of partner who would have qualified and would have somebody who would be participating in the PLC. There is some components coming by of PLC also. However, one thing I wanted to tell you as a matter of clarity, that whatever is the cost in the current year, you are true, the overall other expenditures are at 51 crore in FY24. We are assuming that this 51 crore is becoming a base, and now that number will grow in line with the growth in the business.
Okay, so why you think this number will become a base? So marketing expense, you think we are doing now at a full potential? Is that the understanding?
So we'll continue to spend on creating awareness and marketing, because we believe that previously that amount used to be spent by the insurance company. We believe the insurance is a business where you need to spend a lot of money on creating the awareness. It's not a pull product like your mutual funds. You need to create the awareness and branding, and that is where we need to continuously spend.
Okay, got it. So this number growth would be largely in line with whatever the revenues we are earning from the insurance business. Growth in the number.
Perfect.
Okay.
Perfect.
Okay. And one last question from my side. Similarly, we also do an exercise where fees and commission are deducted parent from the console. And I was seeing that the payout numbers, which was approximately 14% in FY23, let's say 10 crore is a differential on 70.6 crores we made on insurance. This year the number is 24 crores fees and commission on the 110 crores we made on the insurance business. So that number has increased from 14 to 22%. So the take rates where they are, but are we giving a higher proportion as a pass back to the partners? Is that the understanding?
I think overall number of people who has been working in the POS has increased, and probably more and more people are POS qualified. People are doing more and more POS qualified business, and that's the reason your payout is increased from 9 crore to 24 crore. So you are right. I think the non-MF cost on commission side, which was 9 crore in FY23, is now 24 crore FY24. That's mainly because of one component is broking. In broking also somewhat, I think the share of indirect has little bit has increased, but that's not very significant. Mainly it is because of the more and more POS people qualifying and giving us the business.
Got it. So assumption is largely this number may see little inch up, but the other expenses will limit the growth from FY25 onwards. That's the understanding broadly for the insurance piece.
So overall, I believe that insurance, you need to assume that the cost should be in line with top line growth. I think last year was an exceptional where everything was setting as a base. Now probably you can look at the entire balance sheet growing in tandem with the growth.
Okay.
Entire P&L, sorry.
Got it. That was really helpful, and thank you so much for replying to all the queries.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask questions. The next question is from the line of Saptarshi Chatterjee from Grow AMC. Please go ahead.
Thank you for the opportunity and congratulations on good set of results, sir. My two questions are both on the flows. First is on the slide number 23, where we have pointed out our flows through SIPs as well as equity net inflows. But when I see this, it seems that the SIP, although we say that SIP is more like a stable book that we run and therefore it should be coming on, but our net inflows is very volatile if I compare with the SIP book. So I wanted to know your thoughts. How do you see this? Because ultimately the net inflows, if that remains volatile, then what would be the relevance for the SIP book?
I didn't got your question, but Sirish, if you understood, he's saying that your question is why net flow is volatile, right?
Yeah, so although we have a good SIP book that is growing, but our net inflow is very volatile. So then every year, then our net inflow should be volatile, or we can have over a period of time it should converge.
Basically, there are two parts of the gross business. Let us first understand. Gross business, one contributed to SIP, and second component is the gross business contributed by the fresh gross sales, fresh sales. Historically, on a normal year, if you look at Motamoti, the gross and SIP is almost 50-50%, almost on an average. Even if you look at the longer term average in the net sales, whatever would be the gross sales by way of SIP input, that remains as a net sales. So if you see the 10-year base, my net sales would be equivalent to the SIP sales. So whatever is contributed to the SIP, that is the net sales. But as you said, yes, net sales is very, very volatile. If you see, that also depends on the market sentiments, market behavior, mutual fund returns, and so many other parameters. Last few years on the net sales front, it was really good. But if you see 2020 or beyond, obviously, I think net sales were not that great. But as I said, in the medium to long term, that settles at around the flows as the SIP. The second point, what you said, that if the SIP flows are stable, it should be stable, then why the net sales should be volatile? SIP, many a times the client continues the SIP on the future side, but sometimes based on the market sentiments, they also redeem the money. So that is where we are saying that it depends on the sentiment, because it depends on the market behavior. But moti, the net sales would be equivalent to the SIP sales in the medium to long term. I think I addressed your question because I have not understood this correctly.
Right, I understood. Thank you so much. And secondly, on slide number 27 and 28, where if I see your count of mutual fund distributors, in last 2 years, the growth of MFDs has slightly come down. And if we have already gained a good amount of market share in this space of out of 1.4 lakh MFDs. So is it that here onwards, the growth of MFDs would be low and it would be more like a productivity gain? And the second part of the question is, thank you for the data that we have shown the flows from more than 10 crore of MFDs. What is the portion or proportion of these MFDs in our total AUM or flows?
The first question, as you said, that distributors recruited in this year, that is 2024, is reduced compared to what it used to be earlier. The first point is there is a big jump in the number of distribution in FY21-22. One reason was the Carby acquisition. That was the one reason. Second, post-COVID, the examination was easy and I would say completely online. So sitting any locations, the prospective distributor was able to appear for an exam. So that was another reason. These are the two reasons. I think FY21-22, we saw a big jump in terms of adding new distribution. Now the examination is to be given on a specific centers only. So outskirt locations or cities or the villages or towns, guys cannot go to the city of the destination for the examination. So that is why that intake has come down. That is one. Second is this financial year, we have not opened any branch. Unlike other years, you can see that we normally open 8 to 10 new branches every year. In FY23-24, we have opened only one branch. So one reason also for the lesser contribution is when the new branch addition happens on that location, the new addition becomes faster. So new branch addition has not happened in last year. That is another reason. And third, consciously we have moved from the count to the productivity of distribution. So specifically the KRA of the team also has changed in last year from the number of new recruitment to the number of productive recruitment. So I think because of that also the count has come down.
Got it, sir. And what would be our proportion of more than 10 crore MFD?
As of now, I think that number is anyways given, right? I think top % of the distribution community or the top 10 partners contribute around 2.73.
Perfect, yeah.
Yeah, and if you see, I think top 50 partners, I think they contribute almost 9% of our AUM.
Understood, sir.
And the people who are above 10 crore, their number is about 1,565 people in our system. I don't have the exact contribution of there in the AUM. I can provide that data. But number of people who are above 10 crore is about 1,565.
Understood. So this is very helpful. Just one thing to confirm that if I see similarly the growth in the number of investors, that has also come down. So here onwards, the focus will be also getting more wallet share from the client than the client growth. Is it the correct thinking?
both the focus, I think client growth focus is also there as well as the wallet share growth. Wallet share focus is also there. So we can't say that I think our focus is only the wallet share and not the client. We are trying to tap both the things.
Okay, sir. Thank you. Thank you so much and all the best.
Thank you. A reminder to all the participants, you may press star and 1 to ask questions. The next question is from the line of Rohan Advat from Prayer Capital. Please go ahead.
So my first question was that we understand that in our MF distribution business, we get a better rate from the MFs versus what a distributor would get on his own. Is that true in the insurance business as well?
First of all, the point is that the IFA or the MFD will get better rates from the platform like Prudent than the AMC. That is not right. So we are not saying that the one reason for distributors to join Prudent is they are getting higher commercial. Rather, I think commercial, we always say it is competitive but not higher. So that is one part. Second is the same logic doesn't prevail for the insurance business also. MFDs don't work only for commercial, higher commercial with us. One reason for them to work with us is all products is available under one basket, dedicated person supporting in the growth of the business and the technology. These are the main reasons why these guys work with us, not only on the commercial side.
Got it. So secondly, recently you have started FD distribution also on the Fund Bazaar platform. So could you just elaborate on it and what are your expectations from this in the near term?
Basically, we were not focusing on the fixed deposit business till the FY23. Last year was the first year, mid-year, we started focusing on the fixed deposit business aggressively. The first year, and specifically we started focusing after the date mutual fund taxation change. Last year, the expectation, the experience was good. This year, I think we are very, very hopeful that the volume in fixed deposit business will improve. This is not a great margin business, but yes, I think the FD business focus helps us in acquiring more distributor, and second, it helps us giving one more product to our existing set of distributors so that we can help them improve their revenue.
Okay. And sir, lastly, there was a regulation change with regards to the commissions that they'll continue post a 6-month cool off versus them not being there earlier. So any positive impact or negative impact you are seeing are more and more RMs looking at Prudent as an alternative post this change, RMs working in wealth firms or banks, etc. Any comment on that would be thanks.
Yeah, theoretically it is very right that any RM working in a bank wanted to start on his own. This is a good start point for anybody. When they start the business, obviously they need some platform where they get the product, they get the research, and they get the technology. So Prudent is one of the candidates for them to join. Yeah, this is very, very positive for us.
Okay, but sir, have you seen any traction because of this already?
I think it's hardly 1 or 2 months for this particular thing. Yes, we already have started seeing some kind of traction, but as a momentum, if you say, I think it started not yet, but yes, we are hopeful that during the year or after a few months, I think great amount of traction will start.
Okay. Thank you, sir. Congrats on a good result and all the best.
Thank you. The next question is from the line of Prayesh Jain from Motilal Oswal. Please go ahead.
Yeah, good afternoon, everyone. So just firstly on the insurance bit again. So you said that Q4 number is not something which we should look at because the data is still not out. So you'll possibly would it be fair to take a number for FY25 to be as a number which would be there for the full year of FY24 in terms of commission to premium ratio, adjusting for some increase in the renewal to new ratio? Would that be the right way to think on both life and general?
Yeah, basically, as the commercial arrangements with the insurance company has not changed between 23-24 and 24-25. Yes, we said that last quarter certain people are yet to be confirmed, so that is where there could be a drop in the gross receipt in the last quarter. But yes, I think yearly, if you take this thing, then mota moti, yes, I think what you are saying is right, subject to the adjustment of the composition of renewal and the first year premium.
So if there is any upward revision, then it would benefit in 1Q, right?
Let me just add something what Sirish has said. Let us say in case of insurance, I think we have been telling in couple of previous quarters also that we recognize the revenue only once get a very clear clarity from the insurance company, then only it is going to be provided in the books. That is number one. Number two is if there is some spillover of current quarter to next year, there might be a possibility that in the beginning of the year also it would have happened that last year some spillover would have came in the current year. So probably let us understand, let us assume this number as the number of current year only. Right? So some kind of variability would always persist, and hence probably look at this as a standalone number, and probably what Sirish is again trying to tell you that overall there has not been any change as far as commercials are concerned, but if you see 1 or 2 basis points here and there, that might be some reasoning because of the reconciliation issues which might be pending in the insurance stage. So because you understand, as far as insurance is concerned, your even revenue also arises after 15 days of free look period, post the policy gets logged in. There is some time lag also goes there. So there is some differences. It's not like straightforward mutual fund where based on the average AUM on 31st March, there will be very clear-cut clarity that you will earn this much. Because there is a free look period also. There might be a cancellation of the policy afterwards. So it's like kuch na kuch, I think the spillover रहता है. So look at FY23-24 number as standalone clear number. 24-25 में कुछ spillover इस साल का अगले साल आएगा, तो उसका उस साल के end का भी कुछ spillover next year जा सकता है. So I think we need to look at the standalone number, but I'm just trying to explain what Sirish is trying to tell कि overall rate में कोई फर्क नहीं है. छोटा मोटा अगर differences आ रहा है अगर आपको overall book के अंदर, so that is another thing also. If you are trying to understand the overall earning on the total book, you need to understand the composition change also, right? Because let us assume that in the current year, if my book in GI has moved to 120 crore, the first year and the renewal के अंदर rate difference होता है. LI के अंदर तो first year renewal में बहुत ज़्यादा फर्क रहता है. So when you look at the overall earning only on first year, then it's a different thing. But if you look at the first year and renewal combined, then also that composition will have an impact on the overall rate.
Got that.
If you want to add something, I thought I'll just give the clarification.
It is perfect.
Got that. Sir, and secondly, on the life insurance side, is our mix changing in some compared to what we would have done last year in FY24 in terms of product mix?
Definitely, I think the percentage contribution from the endowment plan or the guaranteed or non-par plan was much higher in the last financial year. This year, there is a significant drop in the endowment or the non-par plans post the taxation change. Obviously, the percentage has moved in favor of term, annuity, and the units.
Okay, and does that impact your commission ratios also? No.
Compared to annuity, compared to the endowment plan, ULIP might have little lesser commission, but obviously, I think, but this time also the contribution from ULIP is not that high, so we can say that the reason of drop is because of the composition mix.
Okay, got it. Sir, and with respect to PMS and AIF products, is there any quantum that you can mention about how much we would have done in FY24, and what is your vision for this AIF PMS possibly by say in the next 4 or 5 years? What is the kind of scale that you want to achieve?
So, we would not like to give you any guidance, but as we said, the last 2-3 years, there is an aggressive focus on the PMS AIF business. If you see the current AUM of this PMS AIF combined, we are already at 800 plus crores of AUM, 100% growth in last 1 year. But I think that says that incrementally we are very, very bullish on this particular product. Acceptability of, because when we started, I think PMS was considered as the wealth product. We started pushing this particular product in the platform side. Now I think the team and my distributors also have accepted that they also have the HNIs and wherein they can push this particular product. We are very, very hopeful, we are very optimistic that in terms of PMS AIF business would be higher than the mutual fund AUM growth.
And what would be a gross realization on AIF PMS?
percentage we would not like to give exactly the number, but yes, I think it is 30-40% higher than the mutual fund yield.
And sharing is similar with the.
Yeah, the percentage sharing may be the similar.
Will be similar. Got that. And sir, last question. In terms of PIN codes penetration with respect to reach of Prudent MFDs, where we are and how do we want to scale this up, deeper penetration into the country geographically, whether any further expenses would be needed to go deeper into the country?
There is many things can be done on the penetration side. I think India is very, very vast, and still we would say that Prudent can penetrate in many cities or towns as well. But last year we just wanted to consolidate, and that is the reason last year we had 2 branches, hardly except 1 branch we opened in last year. This year we are planning to add 16 branches, but mainly very near to the locations where our strength is there. So this year we are opening 16 branches, which is again the highest ever, but all the branches where we are opening is near to our strong base.
So that would incur some additional cost, right?
The cost expansion or the capital cost in our branch opening is hardly anything because we don't have levies offices. The manpower cost at the ground level is not that costly. Obviously, that will add some cost, but it is not the capital expenditure is not that costly.
Sorry, can I just slip in one more question? So we have, gamut of products now. You have mutual funds, insurance, fixed income products, AIF, PMS. Are we looking to kind of start off with a wealth management kind of a product or offering to our customers or MFDs where they can become our wealth managers rather than just distributors?
Practically, we are offering all set of products. I don't think that any products what the wealth manager or the banking wealth manager will selling, we are not selling. So practically on the product suite wise, yes, we do offer all the products what the wealth manager offer. The only difference is the focus. Yes, as I said that last few years, I think we started focus on the wealth product as well. And that is where we could attract many of the banks.
Got that. Thank you.
Thank you. The next question is from the line of Nidhesh from Investec. Please go ahead.
Thanks for the opportunity, sir. So can you share some trend how the churn of MFD happens? What is the stickiness of MFDs, and what is the number of MFDs which are having more than 50 crore of AUM with us to understand if their AUM grows, whether they remain with the platform or they move out of the platform?
Yes, please. Shirish?
Hello? Yeah. So the trend-wise, as I think earlier calls also we have said that any MFD, when he becomes bigger, it becomes very, very difficult for them to move out because most of their if any MFD, and what are the reasons for any MFD to move out? One reason could be the commercial difference. There is some disturbance. So repeatedly we have communicated that we also have the tiered structure. When the MFD becomes bigger, we also share the higher commercial. So there is no big gap between what he gets from Prudent and what he might get from the AMC. So there is no commercial aspect. Technology-wise, yes, we keep on focusing on improving the technology, and I think we are very, very proud to say that in technology term, I think we are probably the best, or at least not the best, at least we are at par with the industry. So I don't think that there is other reason for them to move out. Third, here they are getting all products from one platform. If they go to the AMC, obviously they have to go and discuss and negotiate for every product with a different manufacturer. So that is again a positive aspect for any distributor to work with. And hence, I think the attrition ratio in the MFD segment is very, very less. Third, I would say that anyway, even if somebody wants to move out, it is possible mainly on the new clients or the new business, but otherwise existing clients, it's very, very difficult for them to move out. And hence, the attrition is very low.
Sure, sir. Can you share the number of MFDs with more than 50 crore of AUM?
50 crore.
Currently, So we have got, I think, around 230 or 240 partners are above 50 crores.
Okay. Thank you, sir. That's it from my side.
Thank you. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
No, thank you very much. I think we could be able to try and address all the queries. However, if anybody has any query left to be answered, you can definitely reach out to Parth, who will be able to provide you all the necessary explanation. Thank you very much.
Thank you. On behalf of Equirius Securities Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your